Hey traders, Jason here from Leavitt Brothers. In this video I'm going to dissect a couple trades. At Leavitt Brothers we take the universe of stocks and narrow it down to a short list of about 10 to 15 new setups each week that we believe offer the best opportunities. We post these trades in chart form with key levels identified and we track them. What I'm going to do here is I dissect a couple of those setups so you can see how we operate. It's one thing to be presented with a list of setups, but what do you do with them? How do you trade them? Okay, let's go through some. Okay, here's Ambac. Okay, the stock was a high flyer a few years ago, but it fell on hard times. It had been basing since 2015, and in the near term it had formed a little bottoming pattern. Okay, the volume surge rate here got my attention. Once a stock is on my radar, I start playing around with it on multiple time frames to see what moving averages or levels are most significant. I'll look at the monthly, I'll look at the weekly, the daily, the 60-minute chart, sometimes a 30-minute chart. Okay, I'll start with popular moving averages and then I'll adjust as needed. Every stock, or should I say most stocks, have a moving average or two that's in sync with the stock. I want to figure out what that moving average is and then devise a trading plan around it. So with Ambac, the 50 and 200 moving averages on the daily chart were significant because they previously acted as support and resistance. They also happen to sit right at resistance, as you can see right over here near just above 52. Okay, obviously this is a good breakout level, but I don't stop there. I want to zoom in and see if I can get a better entry using a different chart. Okay, so here's the hourly. Okay, the 50 acted as support over here. The 50 is the blue line. Okay, it acted as resistance here, kind of here, here. Then once the 50 was taken out, it was support here, sloppy support. Okay, so the 50 had somewhat proven to be a significant level. The 200 was also a significant moving average. Okay, it was support over here, and then over here in late February, it was also resistance. So when the stock took out resistance here at 50, you can see resistance here at 50 that shows up clearly on the hourly chart. And then it came back down and tested both moving averages. There was a buy. You didn't have to wait until resistance on the daily chart was taken out. You could have zoomed in with the hourly to get a better entry. Okay, the stock did eventually take out resistance on the daily, and the stock is now resting between its 200 and a resistance level that goes back to January. Okay, so step number one is to identify a stock you really like. This is what we do at Leavitt Brothers. Every week we identify 10 to 15 stocks that have great potential. Step two is to look at multiple moving averages on multiple time frames to find what moving average seems to be most in sync with the stock. Then you can devise a trading plan that minimizes your risk. You don't have to use moving averages. You can use a technical indicator. It's fine. The point is to play around on multiple time frames to identify the best risk-reward entries. Let's look at another one. Okay, here is Square. We've been tracking Square for several months. There have been several buys on this chart, so let's focus here in early February. Okay, the stock had rallied a bunch the previous year and was in consolidation mode, backing up. Okay, I should say the stock was in consolidation mode. It had moved up here above its 50-day moving average. I was looking to buy a dip. Okay, so we have a rally, we have a consolidation pattern. I'm looking to buy a dip within the consolidation pattern. So I want to look on multiple time frames to see where the stock might fall to. It could fall to the 50-day moving average, but as you can see here, it wasn't clean support. So again, I'm going to look around on different moving average to see what different time frames to see what moving averages may come into play. Okay, here is the weekly chart. So as you can see, the 21-week moving average, the 21 EMA moving average on the weekly chart, provided strong support in late December and early January. So when the stock was up here in January, in late January, I was looking at that level as a potential place to do some business. Okay, this gives you a frame of reference to work from. Okay, when the stock is up here and you want to buy a dip, you're not really sure what level to key in on. Okay, hence why you play around on multiple time frames to see what makes most sense. Okay, in this case, the 21 EMA on the weekly told us the 37 to 38 area was an area that we want to key in on. Okay, looking back at the daily, okay, knowing the 50 may or may not provide support, I wanted to see the stock close above the moving average. I wanted it to prove itself. Okay, It did it over here, okay, and moved back to the moving average, paused for a day, and then it eventually closed up. Okay, so the stock moved down right to our level that we were looking at on the weekly, and then zooming in a little bit on the daily, we get we get confirmation of a buy when the stock closes above the 50 on the daily chart. Okay. Eventually, the stock moved up. Eventually, it took out its high and actually rallied. Has rallied very well. This is a stock that we're still in. Now, if you didn't get in here, you couldn't find an entry. Here is the hourly chart with the 50 period moving average. Okay, you can see over here in mid-February where it got above the hourly, came down, tested it, and then moved up. It acted as support here, sloppy support here, here, and here. Okay, so again, identify a great looking chart and then start looking around on multiple time frames with multiple moving averages to see what moving average is most in sync with the stock. You may form a bias or get a frame of reference from a weekly chart and then zoom in with the daily and the weekly. You may have resistance and support levels that you can work off of. You could have moving averages that you can work off of, and even if you're a little bit late, as is the case with the square chart, there are still entries along the way. Okay, so even if you miss the ideal entry, you probably could still get in for a few points here and there. Okay, let's look at one more. Here's Cree. Okay, the stock had been dead money for a couple of years, and then it suddenly came to life. Okay, this big move here put the stock on my radar. Now, I didn't want to chase it higher, so I start looking for levels that may bring buyers to the market. Okay, so again, I'm going to look on multiple time frames. Here's the monthly chart. I noticed the 200-month moving average on the monthly actually was pretty significant. It acted as support over here in late 2014. It was resistance in 2016 here, resistance in early 2017 here. So when the stock got up here, I started thinking, hey, maybe a dip to that moving average would be a great entry. And as you can see, it came in at about 31.25. Looking at the weekly chart, I noticed the 200-week moving average on the weekly chart also came in at like 31.25. So you have two different charts, and a significant moving average is telling us that the same area is significant. So this is an area that I wanted to key in on. Okay, so here's the weekly chart. The stock did indeed come right down to basically that 31.25 area and bounced. Okay, now this looks great in hindsight, okay, but we don't trade in hindsight. I also don't just blindly place orders at levels I like. I want to see how the stock acts when it gets there. Okay, so I zoom in with the hourly chart. Now remember, I've already identified with the monthly and the weekly that this is a level that I'm interested in doing business in. So I'm going to zoom in with the hourly and see if I can find a good risk-reward entry. So here's the hourly, okay, and I see that the 50 moving average on the hourly is pretty good resistance. Okay, it was support here, resistance here, sloppy resistance here and here, but then it rejected the price here, rejected the price here. Okay, so I wanted the moving average to be taken out before I got in. I wasn't going to just blindly buy a dip. Okay, we got a double bottom here, but I want the stock to be able to close above its hourly 50-day moving average before I got in. Okay, and that's what happened, and obviously the stock has done really well. So if I take a step back with the weekly chart, okay, the stock eventually, that dip, by the way, was just over here. Okay, so again, the stock had moved up, got rejected by a previous high, which was at a big fat hole number. I'm looking to buy a dip in what might be the beginning of a newly formed uptrend. I got a level from the monthly and the weekly chart, and so now this is the big picture. The stock took out resistance and is now kind of consolidating. This could be, in my eyes, this could be a long-term hold. Okay, so again, if I were to sum everything up, I want to find really good-looking charts. That's what we do at Leavitt Brothers. We identify them, but then you want to take it a step further. Look at multiple time frames to see what moving averages are most significant, the ones that will offer the best risk-reward entries. Oftentimes, in a trade like Cree here, you don't have to wait until 40 gets taken out. There's probably a dip somewhere in there where maybe it dips to a certain moving average on the hourly chart where you can get in a little bit early. Okay. Come check us out at Leavitt Brothers. For a small monthly fee, small annual fee, I should say, will save you a ton of research time. Our weekly report, which discusses the long and short-term trends and the staying power of those trends, is only $149 for the year. Our sector breakdown and trading ideas report, which offers many new trading and investing ideas, is only $299 for the year. Okay, the stocks I've discussed here are either on our list now or have been on our list in the last couple months. Okay, one good trade pays for your subscription for the entire year. Come check us out.